Hey Trish, Japan gearing up for a big election. The yen has always been a barometer of risk, but is the upcoming election starting to impact on the currency given that the opposition DPG, or rather DPJ, may win?
Well, for one task, the Japanese elections may be a factor for the currency traders because until now, Japanese elections have often been a non-event for the yen, but not this time round. And that's because a likely victory for the opposition could have a lot of implications for the budget deficit, the bond yields, and even BOJ's independence. Now, DPJ is definitely expected to pump prime the economy with a lot of stimulus spending, and this will definitely mean more bond issues to fund those spending, which will definitely lead to rising Japanese bond yields. Now, JGB yields have already risen about 14.5 basis points this year. That's about 1.34%. Now, this might not seem much to you, but Japanese investors, they are very yield hungry, and it could actually encourage Japanese investors to keep their funds at home, and this will actually damp carry trades and result in a stronger yen. But there's also the other side of the coin, the concerns that the new government may force BOJ to buy back these bonds to keep the yields down, and that will mean more quantitative easing, which definitely doesn't bode well for the yen. And complicating this whole picture is the DPJ's mantra that it will respect Bank of Japan's independence. And just for your information, the yen, the benchmark this year is down 4.7% against the dollar this year. It's down more than 20% against the Australian dollar. It's down 18% against the Kiwi. So there's a lot of carry trades going on there in the yen.
Trish, Louis, hang in there. Let's bring in, I guess, at this point in time, it's Mitul Kotecha, head of global foreign exchange strategy at Callion. He joins us from Hong Kong. Mitul, your thoughts on the yen? Is it losing its shine?
Well, I mean, it's still largely range-bound, to be fairly honest, but I think there is evidence that carry trades are coming back into play. The improvement in risk appetite that's been taking place in recent weeks, recent months, and the potential for higher yields in the likes of Australia and New Zealand and elsewhere will play for more and more carry trades. So I think that's going to have some impact on the yen going forward. We still believe the yen will weaken on the back of all of this in the coming months, but clearly at the moment it's fairly directionless. We're still revolving around this 95 level against the US dollar, and there doesn't seem to be a big drive to move either way. I think what's interesting is the fact that despite the massive improvement in risk appetite, the yen is still not weakening as much as people would have expected to do.
Mitul, Trish here in Singapore. So what do you make of the yen amidst all these elections that's due the next 2 weeks anyway? Maybe it could actually lead to higher Japanese bond yields and damp carry trades even more. Do you think that's possible?
Yeah, I think it's a good point, and I would agree with that. I think there is certainly a risk of more expansionary fiscal policy. As you say, on the other side of the coin, it's whether the Bank of Japan is forced to buy more bonds. But for now, I think the greater risk from a market perspective will be expansionary fiscal policy, and that could have some impact on bond yields, as you say. Higher bond yields, if interest rates come back into play, relative bond yield differentials, which would imply, again, a stronger yen going forward. So, many analysts, perhaps even ourselves, may have to rethink the yen view following the elections and depending on the exact implications of policy. But at the moment, as you say, the risk is perhaps for a stronger yen than a weaker yen.
Mitul, let's talk about risk trades then. If you expect this whole unwinding of risk to continue a bit more, would you actually recommend investors to go with the flow, buy the yen, buy the dollar against the major currencies, the commodities and emerging currencies? This is for a quick bet. Or do you think that we should actually take this opportunity to bargain hunt on the riskier currencies?
I still think it's a riskier currency environment that's going to be favoured in the coming months. But it's not going to be a one-way bet. And as we know, day-to-day volatility, the day-to-day moves in the markets are very unpredictable. Suddenly everyone's looking at Shanghai stocks. Equity markets are still a key driver of currency markets. And, unless we're predicting what the earnings are going to do and what the equity market sentiment is telling us, it's still difficult on a day-to-day basis. But I think the overall trend is clearly for improved risk appetite. And that means the risk currencies, that's the emerging market currencies, the Asian currencies like the Korean won, for instance, and also the Aussie dollar, New Zealand dollar, Canadian dollar, for instance, and even sterling will benefit in this environment. So I think it plays perhaps a bit more negatively for the US dollar rather than positively.
Mitul, let's take a look at your picks in terms of those emerging market currencies. Which ones do you like in particular?
Well, I do think there's, when we look at Asia, for instance, I do think there's a lot of room for the South Korean won to strengthen. Certainly my own models suggest that the won is undervalued even at current levels, and it has, it will benefit as risk appetite improves. There's an interesting story today that South Korea is not going to sell as many foreign currency bonds next year to stabilise the currency because there's not as much need. It suggests that there's a lot more stability in the local market, and I think that's going to be positive for the won going forward, as well as perhaps some of the other currencies. We're still favourable in the region across the board. In fact, we look for Asian currencies to strengthen, but there will be some outperformance, such as the Korean won.
Right. Mitul Kotecha of Kalyan.